Hello and welcome to Unleashed, the show that explores how to thrive as an independent professional. Unleashed is produced by Umbrex, which connects you with the world's top independent management consultants. I'm your host, Will Bachman, and I'm here with my guest, Michael Niczyporuk, who is the SVP of Global Product Strategy at Visa. Michael, welcome to the show.
Thanks, Will. I'm glad to be here.
So, Michael, before we dive into detailed questions, some of our listeners are probably aware of it, but just help explain to me, what does Visa do? You don't actually issue cards, right? So what exactly does a Visa do?
Yeah, it's a great question, and it's actually a source of a lot of misunderstanding for people that aren't kind of close to the industry. So there are over three. I mean, first of all, starting with kind of the facts. There are over 3 billion Visa cards out there in the world, and it's pretty miraculous.
Wait,
Wait
a minute, 3 billion? There's like what, 7 billion people? So some people must, and there's like the bottom billion and stuff. What, 3 billion cards? Holy smokes.
For sure. No, absolutely. Yeah. I mean, there are in fact 1.7 billion people in the world that don't have, or even adults in the world that don't have, even a banking account. And so, as you can surmise, that means that there are a number of us, and certainly I would be in this camp, who have multiple credit cards and multiple Visa cards for sure. But what's remarkable is that anyone in the world who has one of these cards that's actually been issued by their bank, like a Chase or Standard Chartered or a Citi or what have you, or a credit union, can travel around the world. Maybe not these days, but can travel around the world to anywhere. They could have had the card issue in Malaysia, and then they can travel to Japan or Czechoslovakia, and they can use that card, and the purchase will kind of go through. In fact, I talked about over 3 billion kind of Visa cards issued. On the merchant side, we actually have acceptance at over 60 million kind of merchant locations worldwide. So that's a pretty powerful network. And now the way that it works is, the way that this came to be is that, payments is actually pretty fragmented, where on the consumer side, or on the corporate side, there are banks, who actually issue the credit cards, usually as part of a broader banking relationship, or debit cards or prepaid cards. And then on the other side, well, there are cards that you can use, to kind of pay the merchant, either an online merchant or face-to-face, probably less so these days in the face-to-face environment. And on the merchant side, well, there's, the merchant has actually their own bank and their own processor who helps to process transaction. Actually, even on the issuer side, there's a processor that's kind of sits between, Visa and the issuer. And then what Visa does is, I'd say a number of things. One is they operate this global network of, tens of thousands of financial institutions that are able to move money seamlessly and pretty much in real time, across the world. They set the rules for those transactions, and then they also operate the network that processes those transactions, at least in most of the countries that we operate in. And then, we can get into this a lot more, but certainly there's a lot of value that comes from the transaction data itself. And so, of course, Visa sits on a treasure trove of transactions, and so there's a lot of data-driven value-added services that we can provide, kind of leveraging that data. But that's kind of a high-level view.
Very helpful. Tell me about some of those data-driven services. Those are typically not so visible to consumers, but what sort of services are those?
Yeah, so there's quite a few. So some of the data-driven services are, especially as payments is shifting more to digital, and and I'd say we can probably get into this more later, but the COVID pandemic is going to accelerate that even further, the move to digital. That opens up the opportunity for kind of fraud and other malicious activity. And so some of the core data-driven services are actually just minimizing, fraud in the network, and basically working back from the aspiration that every good transaction is approved, every bad transaction is declined, and there's zero customer friction. Now we still have a long way to go from that aspiration, but that's kind of what we're headed toward. But then there's also other data services around, say, advertising. Like if you think about it, if I knew your purchase history across all of your cards, I would have a pretty good understanding of kind of what you like, what you don't like, where you hang out, where you might travel, where home might be, where work might be. So I kind of have a pretty good kind of purchase graph, for Will. It's probably wouldn't be too surprised to hear that, there's a lot of advertisers who would love to have access to that type of data. And so there's kind of advertising opportunities that certainly present themselves. Another application is transaction data and where you shop and spend, and how you leverage money in general, is also a pretty good indicator for, how good you are with finances. And so, a lender, whether someone, lending money to a consumer or a business, can use the insights gleaned from those transaction data to make better underwriting decisions.
So those would, I guess, get factored into your credit score, or be something other than your typical like Fiserv or TransUnion like credit score?
Yeah, it would actually be incremental to a credit score, and already, and I actually had the pleasure of working at 3 major issuers before I got to Visa, and all of them in some way already rely on more than just your credit score, or even the data underlying a credit score to make underwriting decisions for lending. And so this really adds to that capability of being able to leverage, the full scope of insights that are available from, all the data that Visa has.
No kidding. Now, I imagine that some of this stuff is confidential, but is there anything more you can share about like how that works? Like what sort of spending data about me would a lender make decisions based on? Is it, if I, go buy a bunch of, if I, is it like basically by product category? Like, oh, he buys a lot of books, so he's probably a relatively, calm, home on Saturday night person. This person goes and drinks at bars a lot. I don't know, maybe they're less credit worthy or something, or is it something else, like the spending the amount that you spend, or like how would those factor into a lending decision?
Yeah, it's a great question. So, well, as you surmise, there's certainly a lot of kind of proprietary insights that go into this, that I can't talk about, but I'll give you a few examples. One is actually something that, I recall back in my Capital One days, and this is something that Capital One has been doing for over 10 to 15 years now, which is they found that the place where you make your first purchase with a card actually is a pretty good indicator into kind of your credit risk. So if your first purchase is at a day-to-day category like a grocery store or a drugstore, or a convenience store, or traditional clothes retailer and department store, those people would have lower risk. If your first purchase is a cash advance, or your first purchase is something that's more likely to be a fencible good, like jewelry, the credit risk goes up. Of course, that's not the only indicator, but that in concert with other indicators, can give you clues. There are also other clues, which is based on the types of things that people buy and where they shop, kind of at the category level. There are people that, let's say people that frequent Whole Foods quite a bit, tend to lead more healthy lives, tend to be more affluent, and that usually correlates with kind of better credit worthiness and ability to manage money. I'd say the other thing that's worth pointing out is that, I'd say, probably if we kind of both looked at these data together, and same with your audience, like we could come up with a bunch of interesting hypotheses. One of the cool developments in the world of technology is machine learning or deep machine learning, where you don't have to come in with a hypothesis. You can actually train software programs to generate those insights from the data, and that leads to kind of correlations and insights that go well beyond these kind of category level, and in some cases kind of fairly obvious insights that we just talked about.
Wow, that's so interesting. So, in the old days, banks would just look at, does the person, kind of pay their obligations? Do they pay their bills on time? And do they have a good sort of ratio of credit to income? And it sounds now that they actually will look at the kind of stuff you buy and your patterns of spending and see how kind of a stable or steady of a person you are. Or just wow, that's fascinating. I didn't know that.
Yeah. I mean, I will clarify that still the credit score and the things you mentioned around your credit score and history and your repayment history are all pretty important drivers, and often they're actually the biggest drivers of kind of an underwriting decision, um, uh, especially for people who have already been using credit for a long time. But especially if you're talking about people who are newer to credit, or if you're a bank that's looking to underwrite a brand new customer, some of these extra data sources can be even more impactful.
Okay. Um, you mentioned coronavirus. Let's get into that a little bit. I'm curious the impact on just the payments industry of the coronavirus. I mean, my guess would be that overall spending is down to some degree, but that the mix of it is probably shifting heavily towards use of cards. I mean, I took out some cash, when the coronavirus was getting in March, and I don't think I've spent a single dollar bill since over 2 months. What sort of impacts are you seeing, and curious to hear what how things may change permanently.
Yeah, for sure. Well, we needless to say, we could probably spend an entire podcast on just this topic and more. I think first, I think it's important to recognize that COVID-19 is a human and societal problem that is already having profound implications on our lives, certainly my life, how we work, the role of governments, and just about everything else. And so the impacts are going to span across all industries. One thing that I find really striking about the COVID-19 pandemic is that it's forcing so many people to use more digital services for more aspects of their personal and professional lives, often for the first time. I mean, we see that in visa data where, through this pandemic, there are tens of millions of cardholders, who have made their first e-commerce purchase.
What? Their first? Wow.
Well, yeah, which again, it's probably a surprise because I suspect you and most of your audience are fairly digitally savvy, and so we all have kind of Amazon Prime and Netflix, and we do grocery delivery, but there are a lot of people that haven't actually crossed that chasm.
Yeah.
And so it's pretty remarkable that right now, and we're seeing that not just in payments, but all financial services and really all industries. And I do believe that many people will likely not go back to the analog way of doing things, at least not as consistently. So I think one thing that we're going to see is that we're experiencing a pretty historical acceleration of digital technology across all industries, and not just financial services. If I focus a bit on payments and commerce, I think while the shift to digital technology is a net win for consumers, it does present a challenge for retailers, particularly these small and medium-sized businesses that have been historically as a group slow to embrace digital. As a case in point, all of us know, again, are very familiar with, e-commerce and Netflix and Amazon and eBay and so forth. But, it's important to realize that even though e-commerce has been growing very rapidly, and even more so these days, it still only represents only about 15% of retail spending. The number is about the same in U.S. and globally. And that's dominated by the likes of Amazon, Walmart, and other large retailers. So most small businesses, most of Main Street, you know, about 75% of small businesses in the U.S. don't even have an e-commerce site. They don't have the ability to accept payments online. So, there's a big opportunity to help retailers, especially small businesses, cross that chasm into digital commerce. And our job, not just as Visa, but as a broader industry, is to make those adaptations, as easy, seamless, and secure and fast as possible. So, while this is obviously a really difficult time for everyone, there's a lot to be excited about too, because I think the shift to digital commerce is a good thing for everyone ultimately, and then it's just our obligation that no consumer, no small business gets left behind in that shift.
Yeah. Well, I mean, e-commerce. I've certainly been buying stuff online since the '90s, but I will say that it's really, and while I maybe have used Fresh Direct in New York City a few times to buy groceries, we had never really done a lot of grocery shopping online. But we've been doing Instacart for the past 2 months, and it's awesome. Like it. We never really did that before because I don't. It's kind of nice to go to the grocery store, pick out what you want. But so that's been for us a big change, and I imagine that even people who were familiar and used to using e-commerce for some things have maybe upped their e-commerce usage in certain categories that they hadn't ever purchased things before. So say a little bit more about what are some things that the payments industry can do for small businesses and that you see happening to make it easier for a Main Street business or to set up an e-commerce capability.
Yeah, for sure. So, first of all, I'll say that I don't think this is really a technology challenge in the sense the technology kind of exists. A lot of this is, what I would call a cold start problem, which is it's kind of hard to kind of go from no e-commerce capability to having something, especially since e-commerce is just not core to a lot of, retailers' businesses. But I'd say that there are multiple things that we could do. One is, we could make it much easier for those retailers to actually just start accepting payments online, and that includes everything from integrating that into their CRM system, and making it easy, almost like e-commerce in a box, where they don't have to do, much or any technical integration on their end, and they can get, up and running right away. And there are a lot of great solutions out there, from the likes of Square and Stripe and others that are, addressing this need and pretty successfully. I'd say once they do get up and running, I think we can do a better job as an industry of kind of packaging all the different things that we do that go into a payment transaction, right? If a company like Visa, we have hundreds of products. And for someone that's not an expert in the financial services or payments industry, it could be pretty daunting. So I think we could do a much better job of assembling these products into kind of purpose-built solutions, that small businesses kind of can implement out of the box. I do also think that one of the roles that we provide as a global network operator, is just providing trust and reassurance. A lot of financial services, even if you think about your own finances, like it comes down to trust. Money in a sense, is based on just trust in, the currency itself. And that's true for the broader financial services system. I think one of the areas where, Visa can add a lot of value is just to bring that trust and assuredness to the ecosystem, both from a brand and kind of reliability perspective, but also for things like better disputes management. So as you might imagine, as commerce shifts to digital, and especially if you have, new consumers who are trying e-commerce for the first time, and you're going to have merchants that are trying e-commerce for the first time. Um, that provides the opportunity for more fraud, like we talked about, that needs to be mitigated, but also the opportunity for kind of ordering errors and shipping errors, and the product being damaged during shipment, or someone kind of realizing that what they ordered actually is not what they expected. Um, so so the kind of chargeback and dispute process of kind of rectifying some of those issues is going to be even more important. And so that's another place where we as Visa and we as an industry can do a lot to help out.
Speaking of fraud, who does that fraud detection? So occasionally you use your credit card and it pops up, oh, this was denied. And then, 10 seconds later, a minute later, you get a text message saying, did you actually try to spend this money? Is that my issuer that's doing all that analysis, or is that somehow Visa doing it, or is it combination?
Yeah, it's really a combination. So every issuer, every bank has its own fraud management systems, that they either built in house or kind of outsourced to a third party vendor, um, and that because payments is core to their business. Of course, they have a vested interest in both ensuring a great customer experience, but also making sure that kind of malicious activity or bad actors are thwarted. Um, but they can only see their own data. Where Visa also comes in is, well, we see the data across our entire network, and so we can see correlations that individual banks cannot. And so there's also fraud management that's built into our systems as well. And often what will happen, because the primary relationship between a consumer and the primary relationship the consumer has is with their bank, often even if someone like a Visa will kind of flag the fraud in the back end, it will be the bank that actually communicates that to the consumer.
Interesting. So when I get those alerts, sometimes it might be just my bank, noticed it, and sometimes it may be Visa sent a message to my bank saying this looks suspicious, and then my bank sent me that alert saying, is this really you? Because maybe Visa has seen the same fraudulent, merchant trying to charge like multiple people with the same, uh, uh, with the same amount or the same kind of pattern that you've detected, and you can notice that when my issuing bank might not notice it.
Yeah, absolutely right. And that actually reminds me, one of the more successful new products that we launched when I was with Capital One years ago was something called Second Look. I think it's still called Second Look, where basically Capital One, as you're making purchases, they notice things like where you might have a recurring payment with with your telco company, and first, or a utilities company, and for some reason the amount charged this month is like way larger than the amount that was charged in previous months. They'll kind of send you alerts to kind of say like, okay, is this right? Or if they see two charges, they'll ask whether that was intended. For subscriptions, they'll say like, hey, did you actually intend to keep the subscription? Or even, and I get this a lot because I'm a pretty generous tipper when I go to restaurants. I'll get a notification which is like, wow, we noticed that you made a pretty large tip. Like, was the meal really that good, or was that a mistake? So there are a lot of things like that actually provide a lot of value and a lot of assurance to consumers that the broader industry can do. And that in that case, these are services that are provided by Capital One, a bank.
I see. I've got a question for you, and I know I want to get to the future of fintech, but I have two practical questions. One is, when you get for some reason either your card is close to expiring, or maybe it got compromised, so you have to get a new number, a new card. one of the big hassles is then going to all of the different utilities and subscriptions and stuff, and online vendors where you have your card stored and changing your number all those different places. Um, are there some cards now where you can kind of just do that automatically and say, "Hello, bank, like please just update all of my ongoing, vendors or merchants with my new number for me"? Is there anything like that now or on the horizon?
Yeah, absolutely. So I think it's a great question, and that's definitely a major pain point for consumers. By the way, it's also a pain point for banks because if you use if you use your card, and especially if you're trying to use that card for a large purchase and it doesn't work, that creates a impetus for you to try another card, and not surprisingly, some consumers may actually go back to using the initial card. So there's lost business over the lifetime of the account. Um, and so, the way that we're attacking this as an industry, and I'd say we still have a long way to go, is something called tokenization. Which is, if you think about it, like, if you're someone like me, and I suspect most of your audience is in the same boat, right? We've loaded our cards in Amazon and Netflix and Uber and Lyft and Airbnb and probably Instacart, a bunch of other places.
Exactly.
It would be really like, even before we get to the convenience point, it's actually kind of insecure if there are multiple copies of your credit or debit card number kind of out there. I mean, all those companies have strong security systems, but having the number kind of be replicated across all these different properties creates a higher security risk. And of course, as you pointed out, well, in case that card actually fails, or is compromised or needs to be reissued or expired, what have you, like, it's a big pain point to kind of reload all those credentials into all those different kind of wallets and merchants. So the way we're solving that is something called tokenization. A good example of this actually is Apple Pay or Google Pay. If you look at the actual credit card or debit card that's loaded into Apple Pay or Google Pay has a different number than your underlying card, and that number is specific to your iPhone or your specific Android phone, and so so even if it's compromised, it can't be used in other channels, and so our aspiration is that similar to Apple Pay and Google Pay, and Samsung Pay, all the places where you can keep your credit card or debit card credentials on file, actually are a token that's associated with your underlying account, but it's not the underlying account itself. Once that happens, what that will enable us to do is to basically, as soon as a new account gets provisioned or set up, we can proactively kind of push a brand new token to all the places where token has been stored. And so from a consumer perspective, it would be no friction, and it leads to what all of us want in the world of payments, which is just seamless, uninterrupted experiences.
That would be awesome. I almost had my power shut off because I just got a bill for my utility bill was $2,800 because, and they said, we are shutting off your bill. It also said, due to coronavirus, we're not shutting off your bill. So like the same thing said final notice, but also, oh, well, don't worry, we're not shutting off. But it was $2,800 because, like, I don't know, months ago, my credit card changed and I had never updated Con Ed. So they had gone for, I don't know, 5-6 months without me paying them. And they were about to shut it down. So that the tokenization is definitely, I'm looking forward to that. Another question before we get into the future of FinTech is when is the right age to get a credit card for your kids to help them start building credit, and what's, yeah, love to hear about, like how you should go about doing that.
Yeah, I mean, I personally do believe that learning how to manage finances, how to keep and maintain a budget, um, how to borrow responsibly, are actually things that all of us should be learning more of, and and I wish there was a way to kind of increase the education level of of all kind of consumers. I think like all things that are kind of good learned habits, I think it's actually important to start those habits early, um, and that can start with things like one of the things that we're working on as industry is kind of family card functionality, which is you know you you know as a 14-year-old can't apply for their own credit card, um, but they can get access to a credit card that's in their parents' name, um, and and you can set controls around that so that there's weekly spending limits or daily spending limits, or there's restrictions on where that card can be used, um, and which is definitely reassuring to the parents, and and that provides a kind of vehicle and on ramp for for people to really learn these skills young, because as I'm sure you kind of realize, you know, uh, building credit and building a credit history, is means that you'll be able to get better rates on auto loans and mortgages in the future, and so it's just something that's going to last a lifetime.
Helpful to know. Love to hear your thoughts on sort of future of tech, some of the of fintech, some of the developments maybe over the past year that or two in that you've thought were really interesting, or some of the things that you see on the near horizon.
Yeah, for sure. So, we touched upon just the growth of digital, the growth of technology and payments, and really all financial services. And we were talking about the COVID-19 pandemic. Um, but really, that's a trend that's been going on in financial services, payments, and really the whole world for, for a while now. Which is, I start out by strongly believing that the technology will profoundly change all industries and also create new industries, not just financial services. Now, financial services and certainly payments within that are arguably especially amenable to technology driven innovation, because financial services already are or should be software and data. And something that's just software and data, well, can be sold, delivered, and serviced digitally. And so that's what we've been seeing across all financial services. The reinvention of every financial service, whether it's investing or saving, or payments, or insurance, through software that's digitally delivered. Think mobile banking or some of your favorite fintech apps, whether Venmo for peer-to-peer payments or Robinhood for investing, or to use an international example, M-Pesa in Kenya that enables tens of millions of people who otherwise don't have access to a bank to send, receive, and borrow money, just from their mobile phones. Now, when I talk about the move to digital, I don't mean just delivering the same product or service that was already available in the bank branch or over the phone and just making it accessible on a website or through a mobile app. Of course, that's where things usually start. Just like, if you think back, the first advertising on the internet kind of looked a lot like newspaper ads, except on a website. Um, the real magic happens when we reimagine each financial service from a customer-centric lens, taking the full advantage of the capabilities of the new technology and medium. And so, at a high level, as I think about some of the things that will happen, as financial services gets reinvented digitally, I think we'll see, at least four things. One is just the explosion of really simple, really compelling, real-time experiences, on a bedrock of security and privacy. So leading technology companies and fintechs, will continue to set a high bar here for convenience and value. And because, like we talked about, all financial services are based on the foundation of trust, security, and privacy will remain table stakes. The second thing we'll see is expanding access and demand for financial products and services across the whole world. So we talked about this before, but globally there are 1.7 billion adults that remain unbanked. That is, they don't have an account at a financial institution or even a mobile money provider. And many others, even if they have an account, they're underserved. And so that creates a tremendous opportunity and really, I would argue, a societal obligation to make financial services more inclusive. Um, the third thing we're seeing is, and this mirrors trends in just the broader technology world, which is financial infrastructure itself, the underlying core infrastructure that runs all of payments and banking, is becoming both modernized and democratized. With growing adoption of cloud, application programming interfaces or APIs, and open financial services. And as financial services infrastructure gets kind of componentized and accessible via APIs in the cloud, what we're already starting to see is that financial services will unbundle into more purpose-built solutions, such as the ability to pay with installments at the point of sale using the Firm app, or making peer-to-peer payments using Venmo. At the same time, those components can also be reassembled into more integrated digital experiences. I'd say the leading prototypical examples of that are the so-called super apps that we're seeing, particularly in Asia. So for example, Alipay and WeChat in China, they bundle together payments and banking along with messaging and social media and marketplaces and e-commerce and even a range of services like ride hailing, all within a single app. So we're going to see more and more of that. And then finally, we talked about this already, but I think it's worthwhile reiterating, which is just the growth in data in more powerful ways, such as deep machine learning, to use data to bring more intelligent, more personalized experiences to financial services. Because every time you interact with a financial service, that creates new data. Every time you move money, execute a trade, or make a purchase, that creates new data. So that's a lot of data that can be used to make better decisions or generate better insights. So those are the big trends. Happy to go in more detail into kind of specifics, but I think net, all this will be a huge win for consumers, ultimately for society. And at Visa, we're pretty blessed to be in the middle of a lot of these innovations that are happening across the world.
For the folks in the world that do not have financial services today, don't have a bank account, I think you mentioned 1.7 billion people. What are the barriers to being banked, and what do you see as some of the things? How might those future state financial services look like for those who are currently unbanked?
Yeah. So a few things. So one is actually, even before banking, there's a kind of a digital identity or identity issue, which is, there are many people across the world, particularly in developing and emerging economies, where they actually don't have a nationally issued identifier. So they have no way to really prove who they are. So giving them a digital identity they can use is really kind of step one for them to take advantage of everything digital, and certainly banking and payments within that. I think once someone has an identity, then I think the other barrier is, in the U.S. we're blessed with a branch on every corner, although I think those branches are going to continue to thin out. But there's kind of pretty good mobile banking infrastructure, but there are parts of the world where banking is not that accessible, and so hence the M-Pesa example I mentioned before, where giving people the ability to kind of bank and move money from their mobile account, is a pretty important innovation. Even more broadly, I think we can make it much easier for someone to open a bank account. I mean, there are a lot of markets where still, in part because of technology, but even more so because of regulation, there's actually regulations that requires you to open certain accounts in person. Um, and so, there's an opportunity to ease those regulations so that people can actually verify that identity and open an account, completely digitally. Um, and, there's also an opportunity to make, financial services just more affordable. There are still fees and kind of other barriers to entry like that are keeping people, especially lower income people, kind of from taking full advantage of financial services. Um, and I'd say the other one is, it's like, if you think about most consumers these days, they lead pretty broad digital lives, that span everything from e-commerce to food delivery and grocery delivery to Netflix and the whole assortment. And also people spend a lot of time on Google or Facebook or WeChat or WhatsApp, what have you. Um, I think the next shift that we're going to see, which sometimes is called open banking, is gosh, wouldn't it be wonderful if you as a consumer could actually interact with your bank in the channel of your choice, and that doesn't mean going to even the bank's mobile app. And so we're starting to see that more and more, especially in places like China and Asia, where actually consumers, like the WeChat example or the Alipay example, consumers can actually access banking, right from the place where they already manage, a large chunk of their digital lives.
Tell us a little bit about your career. So you've worked at some really iconic institutions: Capital One, Citi, USAA, which I'm a huge fan of. I'm a USAA customer, and now Visa. Could you tell us about some of the things you've kind of learned along the way?
Yeah, it's a great question. I'll back up if it's okay, which is, I'll say that, I got into financial services and payments kind of by accident at first. If I go all the way back, I was born in Krakow, Poland, into what might be considered to be a physics family. My dad was a physicist. Both my grandparents on my mother's side were physicists in Russia. And in fact, my older brother got a physics degree from MIT. So when I was 5 years old, I naturally decided, like any 5-year-old would, to become a physicist, and that's something that I did until I was about age 30. Um, I then made the conscious decision to switch careers and start out in consulting, with the corporate executive board, which has since been acquired by Gartner. And actually, my first two clients, as it turns out, were actually a credit card company and a property and casualty insurer, both of which have been acquired since. But then I'd say my financial services education really took off when I joined the corporate strategy team at Capital One, where I learned much of what I still know today about credit cards, payments, and kind of corporate strategy. And I also ended up building and managing the digital strategy team at Capital One, as we were transforming the company to embrace digital. So that was a really exciting time where I think we broke a lot of ground. I then moved on to Citi to lead global strategy for their credit card and payments businesses. And also while I was there, helped to launch a new business unit called Citi FinTech that's focused on mobile first banking and investing. And then I moved on to USAA to serve as their chief strategy officer. Like you said, really phenomenal organization that really cares for their members and orients everything they do around just what's the right thing for the member. And also it was a great opportunity for me because USAA is a remarkably diversified institution that provides a broad array of insurance products, and investing and wealth management products and banking and payments. And so kind of seeing all that kind of from a wide lens was definitely an education for me. And then it brings me to today where I'm currently a senior advisor to Visa, leading their strategy to really improve existing payments products and create new ones.
Fantastic. Well, Michael, thank you so much for joining today. Obviously, people can find Visa online. Any links that you'd like to share that we can include in the show notes for people to find you if they wanted to follow up?
I'd say the best place would be LinkedIn, and certainly, if you want to connect and start conversations there, I'm more than happy to. As hopefully as you can tell, I'm pretty passionate about this space and happy to exchange thoughts and ideas, and definitely enjoy this conversation. I appreciate your having me on your show.
Fantastic, Michael. I'll include that link in the show notes. And for anyone who listened this far, if you've been thinking about rating the show, giving it 5 stars on iTunes, now would be a great time. It helps other people discover the show. And if you weren't going to give it 5 stars, then just don't bother. Michael, thanks for joining.
My pleasure.